Hello there, this is fairbinaryoptions.com. We're looking at a possible contracting triangle on the US dollar Japanese yen, and it seems to be completed. Now, at this very moment of time, taking into account the fact that we are on the 26th of January and the month is going to end on Friday. So at this very moment of time, I would like to trade call options on the pair based on this triangular formation. It is definitely a triangle, as I would say what the market is forming here for the first leg of a triangle would be only wave A in the form of a zigzag. It takes almost the same time for both waves of a lower degree to form, so not even a question here that this is a zigzag, the move from the highs to the downside here. And then, as you can see, basically so the move started from the beginning of December, and now we are at the end of January. So 2 months of consolidation for the US dollar Japanese yen, and my impression is that this market is still bullish, and this market still needs to move higher than current levels. Our contracting triangle normally should go like this being wave A, then to have the B wave all the way here to the upside, then to have the C wave in here, A, B, C, and then we should look for the D wave to the upside. But D wave is not the one that is done here, because if this is the D wave, let's try to put here the D wave. It means that if you draw the B2D trend line from the top to the bottom here to the D wave like this, you are seeing that actually it is being broken here, but it is being broken in more than the time taken for the E wave to form, unless the E wave is the one that ended here. Well, if the E wave is the one that ended here, then the move that follows here seems to be a corrective one in the form of A, B, C. So this simply doesn't work. So basically the D wave will be something like here, in here, A, B, C, D. And now we should look for the E wave to the downside. Now this E wave to the downside is the one in here, A, B, C, D, E. And now we should look for the B2D trend line to be broken in less than the time taken for the E wave to form. So basically this took 7 candles times 4 means 28 hours, and it started now with 3 candles. So in the next 4 candles we should go and bridge the B2D trend line, and this should be enough for the market to start trending yet again. What would be then the target for the move to the upside? Well, of course, the highs in the previous B wave would be a start, and of course the highs in here would be the continuation. Now it depends very much if this triangle will turn out to be a limiting triangle or an non-limiting triangle, because if it is a non-limiting triangle, then it has basically it has no limitations for the move to come to the upside. As it looks like, and how the market, judging by what the market is forming here, it looks like being a triangle part of a bullish move, and this bullish move most likely is going to be done by the time new highs here are going to come. It seems to be a limiting triangle. It seems to be a contracting triangle that has that is coming at the end of a 5th wave and at the end of the 3rd wave, and now we should see more strength to come. In such a case, this bottom here would be revisited yet again, but only after the 5th wave is going to come. It remains to be seen, but what I would like to do here is to go and buy call options by the time the market is going to break the B2D trend line, and I will have here end of month expiration date. End of month expiration date means next Friday, because this is Monday, and on Friday we will have the month of January being completed. So I am looking to buy call options by the time the B2D trend line is broken. So basically that means 118.60 area comes with end of month expiration date. Thank you for being here. This is how you treat a contracting triangle in relation to the B2D trend line. This one looks to be bullish. Thank you and bye bye again.